You're listening to the Valley Current.
Risk is just is costly, is so costly that the justification for, I guess, the business expense, because it's going to get us into our tax topic, which I'm glad you're better and could come on the Valley Current, because this Inflation Reduction Act of 2022, which I guess is mostly a tax bill, did pass after some last minute changes.
And it did. And it's an overload of acronyms. There needs to be an acronym reduction act because IRA, I thought that was an individual retirement account, and now it's also the Inflation Reduction Act.
Yeah, that's confusing. There's no question about that. And it's not really necessarily an Inflation Reduction Act. This was the Build Back Better legislation, originally titled BBB, which usually means Better Business Bureaus, but they use it for Build Back Better. And then I guess they renamed it as inflation started to increase. They renamed it as the Inflation Reduction Act of the IRA. Politics, or a lot of politics, and not so much what's really going on in this bill, right?
I think there still is some deficit reduction. The exact amount, perhaps in the hundreds of billions of dollars, but I think that's really a guess, and it depends on whose guesswork you want to listen to.
Right, but can you reel off a few of the big things that you think affect people like our business clients and corporate clients that want to know? So what's the difference?
Sure. So to summarize and to cover some of the things that are most urgent to my client group, possibly to your client group, and this is actually not for, there's three things that are actually outside the Inflation Reduction Act, but are still critical. One of which is Notice 2022-36. And that comes from the President's National Emergency Declaration under the Robert T. Stafford Disaster Relief and Emergency Assistance Act, 42 U.S.C. 5121. It's a penalty relief for people who filed late in 2019 or 2020. And that includes both a late 1040, a late business tax return, most late business tax returns, or late informational notices like 1099, 1099s. And the penalties and interest for these late filings are being forgiven.
Mm-hmm. Okay.
$1.2 billion penalty relief. And that's very exciting because a lot of people have really been unable to comply timely due to COVID. And they're now getting, the IRS is now getting mountains of mail from CPAs and taxpayers saying, please forgive us for our COVID-related lateness.
Right.
And now this forgiveness is going to be automatic for everybody who was late, whether you mailed a letter requesting abatement or forgiveness or not.
Okay.
You should be getting these penalties and interest back. Even if you've already paid the penalties and interest, you should be getting a refund.
And that's regardless of whether they actually got COVID, right?
Right.
Regardless, like basically it's a forgiveness that extends.
It's a broad forgiveness for anybody who was late in 2019 and 2020. But to get this forgiveness, you need to file by the end of September if you haven't filed already.
Mm-hmm.
So this gives some urgency to this issue. You've got a month and 4 days to get your late filings caught up if you have not already done so.
Mm-hmm.
And in that case, you'll get automatic relief from the penalties and interest.
So the theory of it is that COVID kind of slowed everything down. I mean, there's a separate topic as to what it's doing psychologically to people. But obviously, you've now been through COVID late in the game because supposedly the pandemic is over, but you got it from this domestic travel from the West Coast to the East Coast, or on the way back, I guess, from the East Coast to the West Coast, right? One way or the other. You landed back in California, and that's when you were sick?
Yes.
And you've now been sort of recovered after about a week or 10 days. Is that what happened?
Yes.
And were you still able to work during the week or 10 days, or did you really just have to completely take off?
I had to take off the week that I was sick.
Mm-hmm.
And then after the drugs, I was able to work again at reduced productivity.
And you went into your doctor, physically went into your doctor, and he or she issued prescription drugs. What were the drugs?
I was given Paxlovid after a Zoom appointment with my doctor, and it took some negotiation to convince her that I was that the drugs were required. In my case, it wasn't automatic.
Oh, she just preferred that you just sort of bear it out with rest and liquids, that sort of thing?
The bureaucracy preferred that I not get the drugs. They have a very strict compliance list of criteria in order to get the drugs.
Ah, okay. So you have to show a certain sort of depth of illness to get there?
That's right. You need to have some other condition to get the drugs. Otherwise, they want you to just bear it out.
Oh, like if you were over 65, which you aren't, that would have been a factor, right?
Age, weight, other medical conditions are factors. Family, and there's an interesting question about whether family members or caregiving should be a factor or not. And that's really, that was one of the issues in my situation.
Okay.
But let me throw in a quick disclaimer that nothing I say is intended as legal advice. I'm not an attorney. Jack is the attorney. And you shouldn't rely on anything that's said here without specific advice from a professional, because these rules are constantly changing and extremely complicated.
Right. But one rule you would say that isn't either legal advice nor accounting advice, but is good health advice, that probably if you're going to go on a plane, trying to wear a mask throughout the flight is probably a good idea, right?
Yeah, take the mask seriously. It's worth it. COVID is miserable. Even with the drugs to help, it's still miserable. My mouth tasted like soap and acid reflux for 7 days nonstop.
Ouch.
24 hours a day. It was miserable.
Ouch. Ouch. And so how quickly did you get the diagnosis after you returned back to the West Coast? Was it within a few days?
I had the symptoms after. It took 5 days for the symptoms to develop, and then another 2 days for me to test positive.
Okay.
The self-test, the home self-tests are a lagging indicator. They take a while to really materialize and indicate, and it's possible to have false negatives as well.
Right. So is there other stuff in the Inflation Reduction Act that's urgent, the way you just described this end of September date?
Not really for our clients, but maybe for investors. And before we dive there, let me hit 2 other things less urgent for our clients. One of which is for startups who claim, who take a research tax credit and apply it to their current payroll taxes. So this is, if you are not a startup and you are profitable and you pay taxes, your research tax credit reduces your taxes. But for a startup that's pre-revenue, in general, your tax credits get deferred
Right.
until 3 years, 5 years, or whenever you start having taxes due.
Right.
Your credits don't do anything for you.
Mm-hmm.
But there's a special provision that lets research credit be immediately applied to your payroll tax.
Okay.
And there was a $250,000 ceiling on how much research credit could be applied against payroll taxes. But there's a recent change that lets up to $500,000 of research credit be applied against social taxes.
Social Security taxes.
Medicare taxes. So the first 500, the first 250 is applied against payroll tax. The next 250 is applied against Medicare tax.
Interesting.
For our startup clients, that may be an immediate benefit.
And is research defined to include things like software development and that sort of research, or is it more narrow?
It does include software research. It is complicated. The definitions are all complicated.
Mm-hmm.
I do research credit work for my clients, and my firm can get you this credit. Many other CPAs can do this. Some CPAs who are inexperienced with startups don't necessarily do that great a job at the research credit. So you, hopefully, if you are a startup, I have seen it missed by startups. I have had clients come to me and their previous CPA was not looking at research credit. If you're a CPA, if you're a startup and your CPA does not look, or tax professional does not look at research credit, consider changing tax profession.
Mm-hmm. Yeah.
Again, it is complicated. We can talk about it more, or we can keep going.
Yeah, let's keep going with the overview. We could always drill down in another podcast on any specific topic, because they're all separately worthy of some further in-depth treatment.
Revenue Prop 2022-32 extends the deadline for claiming the estate tax portability deduction. And so estate tax portability means that if one spouse dies, the surviving spouse gets to take their $11 million estate tax lifetime exclusion and combine it with the surviving spouse's exclusion to give a total exclusion as much as $22 million. But it's not automatic.
Mm-hmm.
You have to file an estate tax return when the first spouse dies.
Mm-hmm.
And you used to have 2 years only to file that portability filing. But now with Revenue Prop 2022-32, you get a full 5 years to claim that additional $11 million exclusion. And so that's $11 million rounded number. It's not exact.
Right.
So if your spouse died 4.5 years ago, that means you've got a half year left to find somebody like me to do portability filing.
Mm-hmm. And are the numbers still at those high numbers, 11 million per spouse? So for
they are, but it could reduce in the future. There's a lot of speculation that it may return to a $5 million threshold or a $3 million threshold.
Mm-hmm.
And if it does return, then and you did not claim your deceased spouse's portability, your $10 million, your 40% is the estate tax rate times $10 million or $11 million exclusion. You're $4.5 million in the hole for failing to file a portability tax return on time.
Yeah, I mean, it's so interesting as administrations change and different tax bills get generated. All this stuff zigzags almost every 4 or 8 years, and it's kind of amazing to try to be a tax professional to keep track of it in terms of things like these numbers and how they change over time. I mean, it must drive you crazy. I mean, literally.
Well, it is hard to do tax planning well, and anybody who claims to do tax planning well is probably lying because it's a real challenge at times. In this particular case, with the portability filing, you spend $10,000 or $20,000 to do the filing, and you save $4 to $5 million perhaps on estate taxes. So if you think that you in your lifetime might go over the $3 to $5 million future lifetime estate value, or if you think you might win the lottery and you want to pay a lot less taxes, save $4 or $5 million in taxes, do the portability filing. It seems like very good. You've got better odds on saving $4 or $5 million by spending 10 to 20,000 than you do on winning the Powerball.
Right. Is it to 10 to 20,000 because there's some complexity in the compilation of information that has to be provided?
These estate tax returns are like a book describing the person's life. And so you're basically paying somebody to publish a small book that goes to the IRS.
Wow. So there's a lot of detail.
So it's not a do-it-yourself thing. The way TurboTax 1040 return might be do-it-yourself for some lower medium income taxpayers, but estate tax return is never do-it-yourself, considering how a mistake could cost you $4 or $5 million.
It's the actual estate tax return, or it's a specific portability election, or both?
Yes, the portability election is a special flavor of estate tax return for the deceased spouse.
Okay. And I'm just curious, after death, how long does one have to file an estate tax return? Is it 9 months later, or is that changed too?
So, there's an extension that's available, and it's more than 9 months with the extension, but I don't remember the exact number. I have to look it up.
Okay. So how about on the business side, just focusing on corporations? What changed there?
Right. And now we're into the IRA, the Inflation Reduction Act. I'd say the biggie is really the alternative minimum tax. And it's expected to raise about $300 billion. But not from my clients, and probably not from yours, from the public company. Only the large companies, and typically public companies. And only from a select few of them. And that's what makes this interesting, is that it's not an across the board tax, which evenly affecting all public companies. Instead, it picks on those companies that have been extremely aggressive in past tax filings. So it really targets a relatively small number of public companies who pay the bulk of this $313 billion being raised. And so I expect that it will, if it has not already, had effects on the stock market.
Yeah, because you're saying this actually will impact Microsoft and Amazon and other big companies, right?
You need to look at the specific company and how aggressive they've been on their tax compliance. So a company like Apple that's been extremely aggressive in its, Irish sandwich tax plans, and oversees intellectual property taxation, will be bearing far more of the burden than a company that's been paying its share of taxes.
Right.
And so specific items in their investment portfolio are being disproportionately impacted by this tax.
And is that associated with this minimum 15% corporate tax that's part of this, or is it?
That's right. It's a book minimum tax. So they're not taking 15% of the AGI and saying your tax rate has to be 15%. Instead, they look at the number you get put on your financial statements. And they say, which is not a tax number. And they say, well, you tell your investors you've been making, $100 million, while your taxes should be at least 15 million.
Yeah, so that's easy to audit public companies just from their SEC filings, right?
Right.
So this probably tied to the bigger headline topic, which is the IRS is going to get 80 billion of new monies to try to automate more of their systems and try to get more enforcement on the ground as well.
And also to provide better service to taxpayers,
Mm-hmm.
to be able to answer their phone with reasonable hold times, to be slightly more accurate in terms of the notices that they send.
Interesting. And so you think this will actually make a difference? There'll be a lot of new agents employed, a lot of new phone reps employed, a lot of sort of additional resource complexity, really. The more I think about it, it's a pretty complex topic. And I guess fewer and fewer people these days do their own tax returns, even though you would think there would be some movement in a direction to allow it to be easier rather than harder. But I think for anyone that has any degree of complexity in their life, it's not going to be something that's doable for that person individually, right?
IRS for many years has been underfunded and under-resourced. And so the taxes and the tax compliance has become more and more complex. And it's all built on 1960s tax software that's written in COBOL.
Mm-hmm.
And it's never been upgraded.
Mm-hmm. Mm-hmm.
And so really, a lot of the tax compliance difficulties that individuals and businesses face are due to under-resourcing the tax administration system, which, so my feeling is that there should be an automatic annual increases in funding to I'm in a conflict of interest,
Mm-hmm.
because the more you break the tax system, the more people need help from tax professionals. So my business increases when we have a broken tax system. And so to say, fix the tax system and give more resources to the tax authorities, that's contrary to my own self-interest. But I still think it's the right thing to do, that we should be reinvesting in tax administration and tax compliance, because eventually, the system becomes so broken that the empire fails, that the barbarians storm the walls.
Yeah, I mean, to me, if we had kind of a real effort towards helping people, we would probably build some automation into the reporting system to enable the majority of just simple W-2 workers to do their own taxes, even without using Quicken or those tax programs that they have to pay for, although I think some of them are free. You would imagine something that was so simple that it could be done on a smartphone, or maybe even just a simple computer connection. But these days, I mean, I don't know what number of hours you spend on your tax return. I don't do my own. I have to get it done through outside accountants, and it's expensive and it's time consuming. Have you ever counted the number of hours you spend on your own return? I'm just kind of curious.
It's larger than it should be. Mm-hmm. And the risk involved is also an issue. We want to be able to have predictability in our business and life decisions.
Right.
And not have the rules be changed retroactively each January to retroactively change the tax treatment for the last 12 months.
Right.
Yeah, I think we touched on this earlier in the conversation that predictability is needed. So, and it's two competing forces at work here. Well-intentioned people trying to make the tax system work better, and then people who advocate just keeping it stable, stop making changes, and give me something that I can predict and forecast.
Right.
Especially when you take I'm kind of from a personal philosophic standpoint, not from a business standpoint. Um, you know, I, um, I like the idea of an equitable world where the haves and the have-nots are relatively closely spaced, and so
Right.
you don't have extreme wealth and extreme poverty in a country. I don't think that leads to social stability. This AMT business is really singling out specific companies who may deserve being singled out because they've been so aggressive in their tax approaches in the past. But it's really not a proportionate increase in tax. If you're going to increase taxes, there's some advocacy or there's some justification in my head at least to make it relatively a slow change, a relatively predictable change, and make it reasonably proportionate for different taxpayers rather than singling out certain taxpayers for abrupt changes in tax rates.
Well, Steve, we're out of time, but we should pick this up again. How do people reach you in your tax and accounting practice now that you're well and able to take new clients?
My website is www.srabin.com. That's S for Steve, Rabin, R-A-B as in Bravo, I-N.com. My cell phone is 408-887-6433.
Well, Steve, I'm glad to hear that you're better, and we'll pick it up maybe next week. I'll send you a suggestion to do a deeper dive on some of these Inflation Reduction Act topics because it's a big bill and there's a lot going on with it. I'm sure it's going to have some impact. I'm sure we're going to see some interesting aspects to it. I know the venture capitalists were saved on the carried interest side at the last minute. We should probably do a separate discussion on that. But thanks for coming on this afternoon. You have a good weekend. I'm glad you're better.
Thank you. Thank you for your kind words and for having me on.
Tune in next time on The Valley Current.